Hello, everyone. Thanks for joining and welcome back. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Welcome back, Keith.
Hey, Ivan, thanks for having me again.
Yeah, huge pleasure having you come down. I wanted to get you down to talk about everything that's happening right now in silver, gold, all the excitement, all the questions being answered online, and even, of course, everything that's happening in the economy. First, though, let's start off with silver. What do you think's happening with silver from now till the end of 2025?
So, I gave a price target for silver um, in our annual gold market outlook report, which is a couple of months back now. And I said, I expect the price of gold to go up a lot. If that happens, the silver price should rise a bit. Gold's making all-time high prices. Of course, in my view, it's really the dollar making new all-time lows.
Right.
So we didn't celebrate it, but we posted about it that the dollar broke down below 10 milligrams of gold. People think, oh, well, gold's above, 3,100. No, the dollar's below 10 milligrams. Um, and we almost hit 9 milligrams and then had a correction, which I think I predicted on your show
Yeah.
last time. I said, I think at some point, right, nothing moves in a straight line. Like, gold's in a bull market, i.e., the dollar's in the bear market, but nothing's going to happen in a straight line. There's got to be a correction. And we've had 2 days of it. Is it over? I don't know. It doesn't work that way. And silver, notably not. On the other hand, silver didn't have much of a price rise all during this time frame, so of course it didn't need a correction either. Silver was doing its own thing. So I said, okay, price of silver should be up this year, but nothing like dramatic, nothing into new all-time high price territory, the way gold was. I'll note that so we calculate what we call our fundamental price. The algorithm hasn't been updated as the world has rejected LIBOR, or the regulators have forced LIBOR, suppressed LIBOR. I
Hmm.
guess suppress is the right term. Whenever there's a market signal that says something inconvenient or maybe even embarrassing, um, the regulators tend to not like it. And then, if I was that signal, I would stay away from high windows and high buildings. I'll put it that way. So, LIBOR, the London Interbank Offered Rate, have been around for many, many decades. Now, what was interesting, is, may it rest in peace, actually, it may be resurrected and come back, is what I would hope for, is that LIBOR was a signal for credit stress in the banks because it's an unsecured lending rate that one bank, would give to another. And LIBOR was kind of an average of what banks were doing for each other.
Okay.
And when LIBOR would spike, it wasn't the interest rate spiking, it was LIBOR or the spread, the spread that banks have to pay above, let's call it the T-bill. When that would spike, it's an indication that either they didn't trust each other and or they didn't have to lend. And so the cost of lending would go up. And so they suppressed that for whatever the pretext may be. And now everyone uses SOFR. SOFR is the secure overnight funding rate.
Okay.
Secure being you're pledging treasuries as collateral. And so it doesn't show the same, it's much more muted in showing any kind of bank stress. There can be issues in SOFR, collateral shortage, whatever, it becomes very technical, but nothing like what LIBOR was. So anyway, we haven't updated our indicator, the bottom line of what we use, so the data that's being input into it is a bit stale, but interest rates haven't really moved. The rates that we're looking at haven't really moved that much anyway. 3 month, 6 month rates, in the last 6 or 8 months, and so we calculate a fundamental price of gold. Again, take this. We always said take this with a grain of salt. It's a model. It's not perfect, and now the model also has a stale notion of interest rate.
Okay.
But in gold, the model's spitting out 3,500 right now as the sort of neutral buoyancy point for gold, and $34 for silver.
Okay.
Take that for what it is, but above market price is the interesting, point.
If you're a gold owner, you already know about all the ways precious metals can hedge yourself against financial instability. Monetary metals is revolutionizing how people can invest in gold and silver. Right now, there's opportunities for you to earn 4% interest on your gold paid in gold in their marketplace. Now is the time to secure your wealth in an asset that the government can't inflate away. Join thousands of investors earning interest in physical gold and silver every single month with monetary metals. Grow your gold over time so that you're not just preserving, but growing your wealth in an asset that can't get inflated away by just printing more money. Visit the link in the description below to get started now. Yeah. What's uh
So we had about that.
what's concerning you right now, Keith, in the markets? Is it bonds? Is it treasuries? Like in the world right now, what do you have your mind on, or what's concerning you?
I'm one of the few seemingly, it's kind of funny. As it happens in real time, I feel like I'm one of very few people saying interest rates are going to fall.
Okay.
Big rally in treasury bonds. And while it happens in real time, everyone says two things, which is one, de-dollarization. The world's going to repudiate the dollar and the treasury bond. And two, interest rates have to rise, and they always say, well, because inflation, this, and that, the other thing.
Hmm.
People are going to demand a premium. And I'm like, that's not how the monetary system works. You're not in a position to demand anything.
Right.
If you have a dollar, you are funding treasuries, whether you like it or not, whether you know it or not. Anyway, then when interest rates drop, as they have been basically falling, and they hit a recent low of 3.9% on the 10-year Treasury. I follow the 10-year Treasury for this. But the Fed controls by dictating the overnight rate, but they don't have nearly as much control over the 10-year, so it's instructive to look at it. And I said, who other than me was predicting this? And everyone came out of the woodwork. Oh, I am. This guy is, whatever. It's like while it was happening in real time, I wasn't seeing anybody. I was alone.
Right.
I shouldn't say alone. There are a few, but those are well-known, voices that are, bearish a lot of other things and bullish treasuries. So I think that's happening. A lot of drama around Trump first threatening to, not only fire the Fed chair, whom he appointed, ironically.
Right.
Powell is his guy, or
Right.
was anyway. He doesn't like what Powell's doing right now, but and replace him with somebody who presumably would be more pliable or more subject to what Trump wants, which is lower interest rates, because he wants to borrow more to spend more. They all do at the end of the day.
Of
So
course.
spending priorities will change. They won't spend on the same things as what the Democrats spent on, but they want to spend more. And and or take over the Fed and essentially command it from the Oval Office. I always say we kind of have the third worst monetary system, which is we have a debt-backed currency borrowed into existence by a central bank.
Right.
That's the third worst. The second worst would be a purely unbacked paper that was printed by the legislature, and that's the second worst. And the first worst would be unbacked paper printed by one man, an executive.
Yeah.
Um,
In the Oval
so
Office.
right, exactly. And if you want to see hyperinflation, give the president a true printing press where it's not borrowed anymore, no bankers involved in it. It's just print whenever the president finds it convenient, and then you'll see the hyperinflation that everybody who thinks that's what currently happens, but isn't what happening at all happens at all. When that happens as they think it does, then you'll see the hyperinflation that they've been expecting.
Right.
It's to the ultimate pain of all of us. I mean, it's not something I wish. I don't want to sit here on the ruins of civilization as the last fires are burning amongst the ruins and say, "I told you so." With
Yeah.
my last breath as I keel over. No, that's not what I want.
Right.
But anyways, it looks like maybe that's not happening. So one day he's criticizing Powell, not just criticizing, but character assassinating, throwing him under the bus. The next day, well, no, it's all off. We'll keep Powell. And the markets are like, yay, boo, yay. They don't know what to do.
Yeah, it's so uncertain.
Uncertainty. You know, I, Here's how I challenge people to think about this. Everyone sort of who leans libertarian-ish or free market-ish sort of knows the adage that uncertainty, dampens business investment.
Right.
But I encourage everybody, put yourselves in the shoes of business managers. Business managers are just people. And imagine if you didn't know tomorrow whether there'd be 125% tax. Let's say you produce something in the U.S. and there's some foreign content, but not that much. I mean, everything has some foreign content in it.
Yeah.
There's nothing else. The machines you use are made somewhere else, probably.
Right.
And tomorrow there might be 125% tax that's going to hit your competitors harder than you, or there might not be.
Yeah, it's just all over the place. It's so uns
So
it's
would
crazy.
you would you put $1 million of your own life savings into an investment that, oh, by the way, you're looking at a year and a half before the new factory is really online, and probably a 5 to 10 year period before you actually get return on, simple return on investment where you pay back your investment. So on that time horizon, would you would you make an investment if you didn't know whether there'd be a tariff or not, in the near term,
No, it's crazy.
and whether or not we would have a very permissive Fed or not, what the interest rates would be? I mean, you're just going to be paralyzed because if you have cash, in an environment like this, cash is precious. Cash, ironically, cash isn't trash. Cash is king.
Right.
You might have assets you can pick up for dirt cheap, and you want to keep as much dry powder available for that as possible. Or you might not, and it really depends on so many factors. So you're
Hmm.
paralyzed, and which means investment isn't being made. Instead, it's easy to lay people off, preserve cash, hunker down. Just okay. There's a storm coming. Batten down the hatches. We got to weather the storm, and the name of the game is to preserve as much dry powder as possible, so that when finally the rain stops, the wind stops howling, you can see the sun in the sky again. Not only can you emerge alive, but if you have dry powder, there's going to be good assets available, on sale, and you
Absolutely.
want to be there with that opportunity.
Yeah.
Right now, the winds are howling. The sky's getting darker, and we don't know. Right. So Q1 GDP numbers. That's what am I looking for? I want to see what Q2 looks like, or even some of the GDP now in real time trackers. A lot of activity was pulled in.
Right.
Whenever the government does something, everybody who's going to be affected likes to pull their transactions in to get them done before the deadline. Imagine if you're in the business of manufacturing stuff in China and importing it, you'd be racing your factory 24 by 7 to pull everything in before Liberation Day, which
Yeah.
happened to be the boundary of Q2. So Q1 numbers, anybody who smugly says, no, it's fine, look at March GDP, it's fine to flat, it's up, it's whatever.
Yeah,
Sure.
you wait till you Q2, then you'll see the real numbers.
Right, which has two problems. One is whenever you pull forward demand, after that, you have a period of slack demand to begin with. And then with tariffs, I mean, I don't know how much business out of China is going to be reduced because of the tariffs, but the tariffs are massive.
Yeah, he said they were even he was talking about 200 to some percent if they don't comply with his with his
What is it?
84%
What is
one.
it? 120 something right now.
Yeah, I thought it
Um,
was 84%, but if it's 120, that's and then he even said it'll go up to 230 or 234%.
yeah. So, anyways, change happens at the margin. It's always easy. You always see whenever it becomes political that people make arguments that, oh, come on, that only adds $1 in cost to something. Okay, you're looking at the non-marginal product being sold to the non-marginal customer and saying that's not going to stop that trade. You're right, it isn't.
Right.
Change occurs at the margin, but the bigger the move in, let's say policy in this case, the bigger the margin. I mean, you're not moving from here to here, you're moving from here to here.
Yeah.
There's a lot of stuff that's suddenly been rendered submarginal
Right.
as a result of 120% tariff. And we'll see exactly what the impact of that is, as it plays out. And, my concern would be you get layoffs, right? So for every industry protected, let's say steel, there's, let's say there's 10,000 jobs that you think you can save in steel. And I'm making up the numbers. I don't know if that's right.
Right.
It seems probably roughly right order of magnitude. in the American steel industry. 10,000, yeah, maybe it's a few tens of thousands.
Right.
But how many jobs are there in auto making, truck making, ship making, airplane making, construction materials making,
Yeah.
appliances? I mean, these are industries that use a lot of steel, and if you're driving up their cost, um, the customer is going to buy less. And a lot of the stuff is produced for export. So it makes those companies less competitive. American factories have to shut down. Ironically, the Chinese factories are going to get more business selling to Europe, more business selling to Asia, more business selling to the Middle East, and American companies will be priced out of it if American companies have to pay a tariff on their inputs.
Yeah, and that's not good
And
at all.
German companies don't, and South Korean companies don't, etc. So look for unemployment, look for GDP numbers, and then look for rising defaults on loans and bonds of all stripes. Right, when your business is rendered submarginal, not only do you lay people off, but you may default on your payments.
Right.
Very, very dangerous in a system levered up as much as ours is.
Yeah.
There's an old expression: "It's all fun and games until somebody misses a payment." Do you remember as a kid, was there anybody's mom? There was always one in every neighborhood. Boys, it's all fun and games until somebody puts out an eye.
Oh
It's even
yeah.
worse than when you're playing pirates with, stabbing each other with sticks or whatever, right? It's all fun and games until somebody puts out an eye. Well, it's all fun and games until somebody misses a payment.
Yeah. And then you'll
And
see the real effect, cause and effect.
look for missing payments.
Yeah. Keith, before you go, I really want people to connect with you. Where can people connect with you? I'm going to put you guys' links in the description for monetary metals, but where can people connect with you?
Monetary-metals.com is where they can find out about how to earn interest on their metal. And then at Real Keith Weiner, that's Kei and Wei. There's imposters that run around with misspellings of my name on Twitter.
Yeah, no imposters. I'll put the correct X account in the description below. Keith, I want to thank you so much for coming down to speaking to the whole silver and gold community. And as the markets develop, which I know there's going to be some craziness in the markets coming up here soon in 2025, would absolutely love to have you back.
There will be more all-time highs in gold,
Yeah.
i.e., all-time lows on the dollar as it keeps falling below 9 milligrams, and then eventually 8 and 7, and so on.
Yeah, no, it's gonna be a crazy year. But thank you so much, Keith. It's a huge pleasure having you come down.
Thanks for having me.
Talk to you soon.